Welcome to the CEIBS Knowledge Podcast, produced by China Europe International Business School. On this episode, a must-listen for anyone who really wants to understand the economy of China today, as CEIBS Vice President and Dean Ding Yuan talks with SRF Swiss Radio and Television about the impact of the current US-China trade conflict.
One of the major topics this year, or the overlaying topics this year in Davos, will for sure be the trade war between the US and China. How do you see the trade war in generally has affected China?
Yeah, I think there's the perception side and the reality side. The perception side, the impact is quite significant, but the reality side, first of all the economists will tell you that rationally, in reality, the impact is not that big. I can elaborate a little bit on that. And also it takes time. So we are still at the very early stage to see the real impact. And of course, you see already some problems in China with the stock market last year and also the real estate market. But I think most of these consequences are not from the trade war or trade tension, but mainly from this Chinese deleveraging effort and also some problems with resources allocation, financial resource allocation among the Chinese companies. So it's really not that linked to directly economic-wise to the trade tension. And on the impact side, if you look at psychological side, of course, the impact is huge. Then the Chinese started to realize more about their dependence or reliance on the world market, and also the way to reorganize the supply chain is become very painful. Because for the past 30 years, not only China but globally, we work on the optimization of the supply chain without thinking about the tariff anymore. So there are so many multi-step value-added process in different countries. Now we are facing some challenge. I think it's not only a problem for Chinese, but also a problem for Americans. Like Hy-Vee, the motorcycle company, had to reallocate their manufacturing in Europe directly to avoid these tariff issues.
There are others already talking about that, some already doing it. We have talked to a couple of Taiwanese enterprises which are now thinking or really doing it, going back to Taiwan, going to Vietnam. Is this, in your perspective, if I understand you right, is this just a psychological thing, or is it actually a factual thing that they think about or that they move?
No, again, here also we only see, it's not a trend, a change, but it's an acceleration of the existing trend. For the past 5-6 years, we already observe a huge shift or delocalization of manufacturing tissues from China to other Southeast Asia, even African countries. We have a campus in Africa. We have been doing some training even in Ethiopia, and there's some Chinese manufacturing already based in Africa. And this is a global trend related to the increase of the labor costs, environmental protection constraints, and all these factors. But before these trade tensions started, Chinese companies, some of them were still hesitating because in China you still enjoy superb infrastructure and also a very great efficient ecosystem for supply chain. But now this trade war or trade tension push them further to do that in order to get rid of, for part of their exportation, the Made in China label. So now it's an acceleration. For some companies, I personally observed, they basically accelerated in 2018-19 in order to move their part of their manufacturing, for example, to Vietnam. And with one company I'm sitting on board, we see that the industrial land price in Vietnam basically doubled over 6 months because of this big move. But from an economic perspective, this is a very good way for Chinese to share their know-how or to make things efficiently in large scale but cheap And this know-how will be beneficial to other developing countries. So like Japanese or Taiwanese did during 1980s and 1990s with China. So globally, it's a better sharing of the fruits of globalization, which is a good thing for the emerging of the new middle class in these countries, and even a spillover of consumption economy in these countries in the long run.
How big is the impact now from the trade war, or how much is actually related to things that already happened?
No, but there are a lot of studies on it, but there's one thing very important, because we had Pascal Lamy as our distinguished professor here in December, and he gave a very simple example showing the impact. Before that means before the GATT and the WTO, the trade was quite separated. So every time a country will only export kind of final product by realizing the whole value-added chain within one country. So if we were in that kind of setting, so what happens that if you import one car from country A to country B with a value of 100, we will count only 100 in import, 100 in export. But nowadays, since we will separate the production process in 5 stages, and we will let one country specialize in one stage, just assume 20 is the value creation for each step, for 5 steps. Then if you trade between each other, actually you create 300 import export in the total world statistics. So for him, that explains very well why the trade, the commerce increase is always faster than the GDP growth in the world. So, and for him, is also a very important issue is that what Trump is doing against China is totally out of the clue, because now the trade volume is not important. Just take iPhone as an example. If we take iPhone, the whole value, China only represents roughly 3 to 5% of the value added of one iPhone, because they did the final assembly in China with for Foxconn, as you know. However, in the iPhone's total value, you have 25 to 30% of value added from US. But however, in Trump's way, or in the traditional, the current way to count import-export, Trump actually counts these 25 to 30% of value added into the Chinese surplus against the US, so which is already a very irrelevant way to do the analysis. So the conclusion from that, the impact on Chinese total economic situation is quite limited, because China is still on global level, China is still a low value added creation economy, which means you see a big volume, and you see exactly in December that both numbers, import, export, drop down. And people, of course, when they see the import number drop down, they are thinking about Chinese consumption, which is totally wrong for me, because since Chinese process the components and the raw materials, since you export less, you import less. And since the value creation for you is small, so the real impact on Chinese economy is limited. Of course, that will impact some jobs in some manufacturing workers, but it's already started. So if you look at the past 3-4 years, you must interview our Professor Xu Bin, and he will tell you that the shift from investment infrastructure towards consumption and service in China is extraordinary. So the way we are able to navigate and to shift the labors into the service is great. So that's why we don't see a huge impact on the unemployment overall yet. And I am quite optimistic on this side, because the capacity of service and consumption sectors to absorb the labor is much bigger than the investment and manufacturing, because in manufacturing side you have more and more automation already.
That's a next point I wanted to emphasize a bit on. Yeah. That we were yesterday here in Pudong, and we went to the Pegatron, the other big supplier for iPhone, and we were talking to workers there, and they all were telling us a lot of them are right now losing their jobs. They will not return after Chinese New Year. It's their last days working in this field because, and most of them said, because Pegatron is closing one line or two lines, major lines which were supplying to Apple. So it is. In other words, it is happening, and these people are concerned. And are you telling them you don't have to be concerned? You will find a job, or how big do you see the impact for China in the mean of job losses here?
No, but I don't have the numbers since we don't have these statistics on the first hand. But overall, there will be some painful reshuffling and reshifting of jobs from one industry to another. But I'm quite confident because China went through many of these kind of transformations in the past, and this is one of them. And given the powerhouse of the new economy and the way we create job with the service, I'm quite confident. If we have some colleagues doing some studies about the Chinese GDP. A very interesting number is that if you look at the GDP number, China is number 2 worldwide. But if you only consider the service industry of China, I don't have exact rank, but we are ranked below number 20 worldwide. So there's a tremendous potential on the service side to grow the Chinese economy and also to create more jobs on this side. So overall, of course, it's cruel to say that, but if you go for some individual cases, you will see a lot of painful and horrible stories. But overall, in the Chinese economy, the impact can be absorbed quite easily. So it's more relevant to observe how Chinese will manage the economy. I think we saw very good moves recently. We slightly lose the tighten of the monetary control, important. And also another good thing is that now clearly the government in Beijing emphasized the importance of private sectors and putting more money both with the debt, with the bank loans, and also now they're opening up a new market, capital market for these high-tech companies. So they're tackling these issues in a quite efficient way. So I hope that people are very, very pessimistic. We are by the end of 2018, but maybe it's the worst time. So now we can expect a better life. Yeah.
But in other words, this was, we were expecting that happening. It was part of the 5 years plan even, that the shift towards the service economy has to happen. But did Trump here, was he a fire starter to do something that was actually happening and that surprises now a bit also China, how fast it's happening? Let's even think about if the second round of tariffs would come, there would be a much bigger impact. Is China ready to take that at the moment, or is it are things happening too fast, man?
No, I think what happens is that if we go back now 2 years, I was in Davos, and Xi Jinping made a very powerful speech, and you can see that after his speech, the implementation was quite difficult. He's facing a lot of resistance in China. So what Trump did was actually put some spice into it, and again, I use the word acceleration. So Chinese started to accelerate because there was a lot of hesitation. You have a lot of vested interests. Of course, SOEs want to protect their interests, etc., etc. Now, I think the line is much clearer. So we know the direction to go. And of course, as you said, both sides will have the interest. And you see recently what is happening to avoid a huge impact, because now many of your colleagues are reporting about the huge impact on the agricultural business in US because of the trade war. So Trump himself is facing also pressure there. So I'm sure that both sides will have the interest to find a common ground in order to find an agreement. And since China is moving towards the right direction, and I'm sure US, it's also their national interest to not fight a real war.
I remember you were telling me in an earlier interview that China doesn't have to really worry about, because China doesn't have elections at the end of the day, whereas Trump is facing a new election. How do you see that now? Do you think China still doesn't have to worry, or is it also getting to a point, are we getting to a point where it could also be a serious situation for China?
No, I think the only thing in China, there is a very strong contract between the regime and the people, is that the prosperity, especially economic prosperity, is the key legitimacy or success story if we look back for the 40-year economic reform. As long as we stay in this range, the regime, the government is okay. So that's why I said the election is not a big issue. So they can focus more on the medium, the long term. Instead of in US, you always focus on the 2-year maximum, the 2-year horizon. And in US, it's already a fact because they lost the one of the house, and of course, with the Democratic in power, he already facing a lot of problems. So it's already a fact. In China, it's more subtle. So I think there is always a balance in order to maintain the hope and the prosperity. And if you look at the fundamentals, they still have a lot of powerhouse in order to tackle with the problems. So I'm pretty confident that with the new measures we see, this will stabilize the capital market. It started already, and this will stabilize the economy. And again, the legitimacy of the regime comes from that. So then the country is much more stable politically in comparison with the U.S. because of these short-term issues. So now Trump is facing pressure, and again, it's good. Then people can sit together and talk. Yeah.
But having millions of people laid off at one time is for none of the governments something that they are happy with.
Yeah.
Even it doesn't matter whether it's elected government or not.
Yeah, of course.
So, and do you think that that situation at the moment would not put too much pressure on the
No,
Chinese?
I think again it's about not the absolute number doesn't count, and it's more about the relative number. So the scope is still in a manageable scope if you look at the history of Chinese economic development for the past decades. And the government has a lot of leverage on it. So by boosting the service, and we will find a way to. And recently, as you see, there is a huge wealth transfer from the coastal area into the inland in order to tackle with the remaining poverty issues. And these issues, many of people actually they like to go back to the inland province because they will get some now stable manufacturing or service job there, out of there. So I think it will be balanced. Yeah.
Yeah, that's
Okay.
that's exactly what I wanted to
Okay.
also hear. That
Yeah.
now that we have a shift also to the
Yeah.
inland. So last question: what do you think? Like, what importance for China? Of what importance is the meeting now in Davos? What's going to happen in Davos on the high level meeting from the Chinese side? What are the expectations?
No, I think this is a very important vehicle and opening a window for Chinese, and especially they also pair that with the summer Davos. So the Davos Forum has a very special place in the Chinese political regime because they attract them also summer here. And that's why it's a very regular way. I hope Wang Qishan can again convey the message about the Chinese openness and the commitment to reform. And clearly, since September last year, many occasions these top leaders emphasized on the success of economy and the way they would do it, and also the importance of the private sector and the protection of property rights, not only for Chinese but also for non-Chinese. And I think these are the good points, and we will re-hear again from Wang Qishan for sure, and people will observe how they will implement it. And I think another important point, which was a little bit missed by the media, it was during the import fair in Shanghai. Xi Jinping mentioned for the first time about this opening of this education and healthcare industry to foreign investors. I think we should take that opportunity. And when I talk with Swiss financial institutions last week, they are very confident they will move more toward China because of the openness of the financial sectors. So I hope that like Xi Jinping said, the world will be able to share the economic growth and the consumption of China in the coming decades. Yeah.
I have to ask one more question here
please.
because of this. we have heard this for a long time.
Yeah.
Is it now really happening, or is it just like a promotion of something that's probably not happening at all?
No, I think it's not a promotion in the sense that China has reached the tipping point for them. If you look at all the statistics, recently there was a article, a cover story in the Economist talking about the Chinese powerhouse in science and development. So with all that, it's not also the Chinese interest overall to protect these property rights, first of all. The second one is that now the foreign investments, they are totally in line with many of the claims or the requests from the Chinese insiders, like private sectors and also the middle class people. Then everybody is wish a clearer regulation environment, more stable, and also better protection offered, and more continuity and predictability of the regime. So I think on this side, you have more and more friends in China because of the level of economic development. So I'm quite optimistic on this side.
You mentioned that the number right now of unemployment is totally acceptable, is fine.
Yeah.
We know that there's a bit of a flu. We don't know exactly what the real amount of unemployment is at the time.
Yeah.
If the amount today is acceptable, does that mean that there's been projections on a certain number, a certain rate, that would be unacceptable and start being dangerous of unemployment rate? Does that exist? That's such a...
No, but if we look back in the history, there are some times, especially when Zhu Rongji did the restructuring time, at that time we were facing some difficulties in China. And if we talk about unemployment, if we look at the history also, on the inflation side, it was roughly 40 years ago, there was some peak. But after taking that out, the whole process over the 40 years was quite smooth, actually. The absorption of redundancy from one sector to another. We also, after the financial crisis, after the boom of the mining business, there was also some big risks about unemployment because there is a big shift of mining to other business. So overall, China managed well. Of course, if we look at the absolute number, it's always big in comparison with Switzerland. It must be big. But then the relative number is always under the controllable scale. Yeah.
You mentioned the fact that there's going to be this transfer towards the service sector.
But it's happening, yeah.
It's happening,
yeah.
But there's a certain amount of casualties in that process because service sector is not open to everybody, right? There are some... is that a challenge?
Yes or no. On one side, the job we create in the service is you have the high end and the low end. So it's a full range. So in many jobs, the entry level is quite low, actually. So a lot of people move. If you talk with a lot of the delivery men, and many of them work for manufacturing before, and the job created with a DD, and many of them actually they were former masseurs, and now they are in the driver position. So the shift is quite big. And another big thing we a little bit underestimate in the media or in the scope of our attention is that now China has a much better safety net, which means the Medicare and the Social Security, even for farmers, are dramatically improved. So that gives some stability also on the countryside. If they move back, they can get some minimum to make sure that they have a decent survival level life. It's not like before, there's a dichotomy. You only had the protections if you are citizen, but if you are a countryside city, you don't have anything. So it's changed and it's improved dramatically. When I talk with some Chinese charitable organizations, and actually now they don't even go to this classified county with poverty labor because they have received enough subsidy to support their education, so they are doing different jobs. So there's a huge wealth creation, and now there's also a huge, as I said, wealth shift towards these poorly developed areas in China.
So we understood throughout all this interview your relative optimism That's what I hear for the
Yeah.
future. We still don't know. We mentioned the economy slowing.
Yeah.
Not linked to the trade war,
Yeah,
but the
yeah.
economy slowing. And the deleveraging of the authorities and the trade war came and mitigated
Yeah.
all that. We saw a couple measures that were announced yesterday by the
Yeah.
central bank. Tax cuts, massive
Yeah,
tax
yeah,
cuts.
yeah.
Is that going to be enough for 2019 to just boost the economy?
I think that would be still enough because there's a big momentum in the economy in China. As I said, there's a huge potential in the service, first of all. And given the base now in China and also the per capita level, China enter into 6% or even 5% a year. It's still a very good growth rate because now the base is much bigger. So literally, everybody will get slowing down if we close to the front line. Every country in the world, none of them can escape from that. So the slowing down of the growth rate is related to the level of the development. So for sure. On the other side, the good thing for China is that within China, you have a huge diversity or huge level difference between different provinces. But then in China itself, you can imagine like a continent. So there's still a lot of, we call it a dividend, but it's a kind of potential by moving activities from the coastal to the inland. So this is also happening. So this is something we don't see for a much smaller country like Japan or Korea or even like Taiwan. So in Taiwan, you are too small, then you move to China. But in China, you can move into the inland. So these are the new results. Recently, I was talking with some of our economists. For example, Jiangsu province is by far the richest province if you take the cities like Shanghai and Beijing away. Jiangsu province already reached the definition of World Bank like the highly developed economy, if Jiangsu province is a country. So for the next 10 years, if we don't see any growth in Jiangsu, but only 7% in Sichuan, for example, then China will literally become a high-income country in 7 years. So if you look inside China, there is such a big potential according to different provinces. So there's a lot of course, there's one condition is that the government shouldn't mess up, shouldn't take the right measures to take out these remaining potentials of economy. As you said, now they are doing the right thing. And of course, there are some hesitations, there's some debate, but it's moving forward. Yeah.
The right thing being not to do what they did in 2008 and keep on with the increase of the debt and go towards that kind of stimulus.
No,
right?
it's not really the debt. It's really about how to optimize the allocation. So it's more about putting the money into the most productive sector of the industry. So that's very important. And the debt itself is not important because people talk a lot about the debt. The debt of China is very different. So one country with much higher level debt than China, and it's still considered as the currency haven, is Japan. So China, if you look at China and Japan, you see a lot of similarities. I don't worry about the debt collapse in China like it happened in Turkey or Argentina for a very simple reason, is that on one side, Chinese borrow among each other. So it's more like an internal problem, like in Japan. So in China, if you look at the debt denominated in dollar or euro, is extremely small. So actually, the impact of some RMB depreciation on the debt is very small. Another important issue is that, as you know, the Chinese exportation machine is very, very strong, which means anytime there is a depreciation of RMB, Chinese importing business will gain in competitiveness. It's not like in Turkey or in Argentina. Then if the currency collapse, they have a problem with the debts, and they don't solve their problem for exportation, even like UK, right? So it's a very different situation. I think people worry too much about the Chinese debt, but the real issue is that the resources generate enough future outcomes, productivity. So that's why the channeling of these debts are more important. So these things are happening now. since roughly September, October to talk more, channel more into the private sectors, more productive sectors. So that's happening.
Right, but ideologically, philosophically, the strategy of China after the world crisis in 2008, and if they were tempted to do the same thing next year, if it was really slowing down, there's no problem with just injecting massive money investment in the economy and doing basically what the World Bank said, be careful, what now Standard & Poor's and all the notation companies are red lights all over.
Yeah.
No, it's not a big deal.
No, I didn't say that. What I'm saying is that you shouldn't go into the zombie structure, which means if you use the debt, you finance some non-productive projects, then you will have problems. So that's why you should let the market play, which means that the resources should be allocated, debt or equity. I'm a finance professor, I don't care, because the real issue is that the assets on the other side. If the assets are good, actually by borrowing money is a good thing. In China, it's still enjoying good growth. So if you invest properly, using debt or equity is not a problem. But the problem is that you shouldn't take your yes men, which are the state-owned sectors, and to let them grow into unproductive assets. Then you will have problem later. So I think the mechanic is not look at the level of debt, but look at the reallocation of this debt into which industry.
What kind of areas, what kind of sectors, in your opinion, you mentioned the private sector, but more globally?
No, but more globally we should favor about the development of service and the consumption. So it's not by investing more into the state-owned mining business or state-owned steel business, because the temptation was these are big guys, these are your yes men. So they were fully in coordination with your policy. So the reaction is very quick. But the problem is the medium and the long-term results are very bad. So I think now they started to realize that. So if they let the market to do the job, so for example, hopefully this new high-tech board will be open in Shanghai very soon, then it will be investors their own decision to go for this investment or not. And they will, of course, assume the risk. We see recently the disaster of these shared bikes. But for me, that's not a problem. And I even joking with my students, saying that this is a good redistribution of wealth from the rich to the poor, because all the poor Chinese receive subsidies riding the bike for 1 yuan, and actually all paid by the PE investor. Why not? So actually, if we are in such kind of situation, there is no overall risk for the economy, because the investors or the buyers, everybody will assume the risk.
Do those sectors, might they include SOEs? They could be included in that reallocation.
I will have less optimism on that. As long as you stay with the same governance structure, I don't see a way to boost the SOE sectors. I think we had some good reform before, trying to retreat even among the SOEs the importance of the state or the party. So we try to, first of all, let the management manage, but we see there's a problem. And then we even make a retreat on the board, say, okay, governance, we should introduce independent board members and et cetera, et cetera. And even lately, we talk about to retreat the state only as owner, but not as a manager. But there was some temptation 2 or 3 years back. We started to go back, saying, okay, we should get more interventions or even mix with the management. And now we saw the problem. So hopefully it will reach. Ideally, it would be a more like the true mixed ownership, and to let the minimum the state can do or the maximum the state should do is to be the passive investors. But because you are you are the referee, right? You are the referee of the market because you are regulating market. And on the other side, with your army or your players, you also own the player, or you are yourself is a player. Of course, referee cannot mix with player. So on this side, hopefully I will see some positive changes. So if we don't see that positive change, there's no hope that the SOEs will play, as you said, a very efficient role in the economy. It's impossible.
So Made in China 2025 depends on this.
No, I don't. I would say that we misinterpret a little bit the 2025 so-called plan. I recall very well when I was a kid. It was early 1970, middle of 1970. There were also an aspiration of China, the full modernization. And at that time, in every school, every corridor, we even put some, target with numbers. But at that time, you Swiss are laughing at that. Nobody believed China can do anything. Actually, Chinese, this is Chinese culture, they like to put something on the wall as an aspiration. But this time, because China is big and people out of China believe that China can deliver, or they have a lot of fears. And this plan itself, written by some totally disconnected so-called expert in China Academy of Social Science, or some people, think tank. So it's just aspiration again. And then, of course, always Chinese like propaganda, like a long-term goal. So they announced, and the people overseas started to really interpret in their way. So that creates a lot of problems. And now it's a funny thing that that the Chinese media are not allowed to talk about 2025. You see that it's not really a firm belief. For them, it's just aspiration. Suddenly they realize they regret, so they just retreat. They say, no, please do not comment on it.
Why do they regret?
No, because they find out it's a bad press, actually, for them, right?
Linked to Donald Trump in the U.S. as well.
No, it's not just U.S. I think the Germans or the Swiss, everybody worried because they believe that if China take approach, which is very different from Deng Xiaoping's approach, winners take all, then actually if we fulfill that plan in the way they define, it will really become a zero-sum game. So China will be the leading economy in every industry. So, and the others say, what is our hope?
But it's coming back to the very issue of the SOEs, because that's what scares us in China, West and China 2025.
But that's the funny part, is that if you look at the powerful Chinese economy, none of them are built by the SOEs. So all the big successful companies we see China, they came by accident. It's not planned. And every time we plan something, we create overcapacity, rent-seeking, and the fake companies. So you see the problem with the solar industry, the shipbuilding industry. Now it's happening with the electric car industry. So you have so many companies just go there, SOE or private. Chinese are opportunistic. I agree with you. They are very entrepreneurial. The good side, the bad side, they are always rank-seeking people, normal, right? Because if there's a rent, they will do the rank-seeking. So what happens is that if you provide so many incentives, people just fake themselves to create a company in order to get the money. So actually, it's a waste of resources. So we will say the Chinese economic growth, despite that, not thanks to that, right?
Last question, because it's getting long, but I cannot.
Yeah.
It's interesting because I hear your speech,
Yeah.
but when I think about what I read in Xi Jinping's speech, when I see what the party says, I see different things. I see reinforcement of SOEs. I see prominence of the state in the economy. So what I see in the picture, what we hear as journalists, doesn't fit your description now.
But I agree with you. We saw all that. We worried. So that's why from September they backed and they started to re-emphasize. And even Liu He came out to say 90% of jobs are created by private sector. So how important for Liu He to come out and to tell you the truth? Actually, 90% of jobs are created by private sectors. So that's the reality. So there is always, they have their dream, maybe the doctrine, which doesn't fit to the reality of the Chinese economy. And one thing we also see clearly now is that the way they present the thing, it doesn't reflect the reality. If you don't cherish or keep that people motivated, I mean that people, the private sector, to invest, and the middle class consumers in China to consume, you have problem, and this problem is big, is much bigger. They are the 80-90% of the economic engine of China. Now we see once they start to worry, they are discouraged from summer last year, and then you see some break on that part. You see problem. So now they started to revive this part, So I totally agree with you. The problem was we had a need to shift. That's the issue. That's normal. And then we started with some wrong measures. We were a little bit overconfident, and we announced something which didn't reflect the reality. Then on outside, it makes people worried, especially the Americans, but also Europeans, a little bit Japanese. And then we have more tensions outside. And inside, people also started to worry. And then there is a stop of appetite for investment and consumption, a little bit, not too much. Then we saw immediately the problem. So the people in Beijing, they're pragmatic. So they realize that finally the way they don't admit that directly, but they see the problem. So that's why I think roughly from September till now, you see almost a 180-degree change, right? So that's why you are totally right. The what you mentioned is more before summer or around summer, and what I'm talking about is more like now. So it's changing, of course.
It's not clear that it's right now. We're still waiting for announcements and things, right? Because we thought the reformists, liberals, Liu He and the bunch, we don't know how many they are. We don't know how much they weigh. We were hoping for all these announcements, but then there was this announcement of the 40 years of opening and reform, the speech of Xi Jinping that made everyone feel like, well, what's he talking about? Because he went back in the old ways, right? Is there not a contradiction? Do you see a contradiction within the party right now on the path to
No,
follow?
of course there's always contradiction, but there's one line is extremely important. Now we totally shift. The big shift of the economic reform is that the Communist Party signed a different contract with the Chinese people. So it's not an ideological aspiration anymore like before. It's a more economic reality. That's very important. So if you have the same contract, then they will stay on the track. Because the legitimacy since 40 years, also the credit worthiness of China in the world, or even the fear you have against China, all linked to the economic success story in China. So that's the biggest story. So everybody has the interest to make that story successful again and again. If we break that, so we are changed totally the paradigm. And of course, the people in Beijing, they have no interest to change that paradigm. So I think we should focus on that because that's very important. So everything they are doing is not ideological anymore. It's
so
more
the
about...
president is not a dogmatic Marxist. He's open and he's ready to...
No. He cannot, because the way he presents his China dream is also linked a very important improvement of material life for the ordinary Chinese. Now, of course, focusing more on the inland and the people who stay in the poverty, which is a good message. So as long as we stay there, no risk, no big risk. We still have to look at, they won't go straight forward, but they were moving gradually toward that. There's no other choice. Yeah. So that's why I'm very confident.
Thanks for listening to the CEIBS Knowledge Podcast. Keep up with the latest in Chinese economic and global business trends by subscribing to the CEIBS Knowledge Podcast on iTunes or through your favorite podcast app. More CEIBS knowledge available through courses at our China campuses in Shanghai, Beijing, and Shenzhen, our Africa campus in Accra, Ghana, or our European campus in Zurich, Switzerland. CEIBS is the bridge that connects the world and China.